Okay. So basically, stocks, when a company goes up, their shares go up. So let's say you own 80 shares of a company at $10, and then they go up to $80. That means those 80 shares that you hold, or let's just say you hold $800 in that, them going up, it's 8 times your money, so that's an 800% gain. Now look, now you have 6,000. That's like how stocks work. So yeah, basically that's like stocks. When you buy a share of a company, they could be listed at $50, $20. Stay away from stocks under $1 billion market cap. Buy stocks with at least $1 billion market cap. Avoid penny stocks. That's how people do pump and dumps. Yeah, it's just a lot of bad things happen with penny stocks. And then that's where like that's where individual stocks is like where you make money. Like you can make money fast, make money slow, you can lose your money. It's more of a risk. That's why people invest in index funds. And I'm trying to do a calculator to show y'all about the index. I might just use ChatGPT because it's really making me mad. But indexes are basically a bunch of stocks put together that stay stable and they grow over time. So the risk of them like just you not making money on it is really low. It's impossible unless you sell short term. You hold long term, watch that money grow, and you make money off that. Like look, I'm just gonna use ChatGPT because I don't care. Use AI or it's going to use you. Let's just say if I invest, you just starting off 1,000 a year, and the S&P 500. How I made in 8 years. Sometimes it be glitching, but let's see. Slow growth, depending on how much it returns. But 4,000 profit. That's why I recommend individual stocks. Really, you could hold like this and then just have individual stocks, because that's all it is. Like, look, $200 a share. This is all you doing. And look, I'm gonna teach y'all something about buying. When you find good stocks, you have to know when to buy. You don't want to buy too high or too low. Well, of course you want to buy low. What the fuck am I talking about? But you saw it broke out here. I got in on this at like 170. 170 is a good price. Let's talk about something that's like actually good to buy right now. Redwire. Look at this. So this one I'm also gonna be doing daily. Just analyzing stocks. We saw it went up, reached a new all-time high. Never buy stocks when they get high like this. Don't buy them, because look, they're always going to go back down because they call it a pullback. It's healthy. So boom, because stocks never just go completely up, and if they do, that's really not good. I'm not gonna lie. Boom, up, down. And basically when you see a gap, that means the value of the stock is like going crazy. It's a lot of people buying. So gap up, a lot of people are buying. Gap down, a lot of people are selling. And then when people panic sell, really that's when you want to buy, and then they keep popping, just keep popping up. But it's really not hard at all. All stocks are is just buying your investing money into a company and hoping that that same company you put money into is going to grow in value. And you're probably wondering, well, how do you find good companies? Look at their year-over-year return. Revenue, hold on. %17 year-over-year growth. Look at companies that are growing in value. Because if they're growing in value, that means they're going to keep supplying more. You don't have to worry about their business not being good. It's just like a decline in GDP means that people are having a hard time. Consumer demand is dropping. If that drops, everything drops. So you also want to look at the GDP too, but that's really all it is. Analyze stocks. Here, I'm gonna give you a better example. Copper. Another thing you could do is look at institutional holders. Look at the big companies that are holding this stock. Look, 721 institutional investors. Norges Banks. Look, in the last 2 years, following investors and hedge funds have bought the highest volume of shares. Look at this: Norges Bank, Capital War Investors, JP Morgan. You have banks buying this commodity right here. And then you saw my video, you already know why it's so valuable. So look, just like this, that's simple. Bam. And let's talk about uptrends now. When you see a company, it's like it's going up right here and then a little down, then it's going back up again, making a new high. It's doing like a little pullback and going back up. You call that an uptrend. It's just simple things. You're just seeing patterns. And then this one also looks like an uptrend, I'm not gonna lie, so it could go back up. Like, it's really that simple, guys. And then downtrend will be the exact opposite. Like, let's see if we can spot a downtrend here. You see, look at this. Yeah. Or let's look at Nike. Nike is a downtrend. When a stock is on a downtrend, like look at this. You can't really see it. Let's do Lucid then. The downtrend would be the opposite of that. Alright, look, you see, it's going down. The tip of it is going down. And basically what this is right here, when you see this right here, like this big thing, this means that people were buying. A lot of people started buying, and then the sellers brought it down to here. And this is where it opens at, right? Shit, I don't day trade like that. I just know the basics. But you see, this means that sellers are now in control, so it's going to bring it down. Whenever you see this, buyers, sellers took over, brought it all the way down here, and then yep, and so on. It's really that simple. That's really how you do it, stocks. And then what else? Oh yeah, so managing your portfolio. The more diversify your portfolio is, the least it's going to like get good gains on it. So if you have like, so a total of 100%, right? If you break it down into, let's say you have 30% of Nvidia. Another thing I would say, if you're going to hold a bunch of stocks, just buy index fund, because that's what it's for. Let's say 30% is in Nvidia. Let's just say you're holding 3 stocks. 30% is Nvidia, 40% is fucking, let's just say Redwire. And then these are very good stocks, by the way. 30% is what's that one drone stock? ONDS. All of those are going to do like these right here, like a portfolio like this is going to be like moving a lot. So if those stocks was to drop down a lot, then you'll be down along your portfolio. But the more stocks you hold, it's like literally the less risk. But another thing I would say, yeah, don't push your eggs all in one basket, but you choose your risk, honestly. Yeah, it'll even tell you how many stocks. It's gonna say like 10. Oh, more than 10. 20 to 30. This is what they prefer you to hold. But that's a lot, and I feel like you should just hold an index if you're going to invest that many stocks. So I would keep it at like at least 10 minimum. Because yeah, especially you want to make money off AI, you want to have a good percentage in it. So at least 40% should be AI. You know, high risk, high reward. You could go even higher than that. You could do 100%. Shit, if you went 100% on microchip, ooh boy. But yeah, if you have any questions, let me know. That's literally all it is, bro. That's it. You're just looking for companies that are going to grow in value. You could buy these stocks on Robinhood, Webull, and yeah. And the reason why people use TradeView, this right here, is to look at the charts and to study them. And then if people want to like know more about candlesticks, they can. That's really it though. And then you get a little like $5 once you join. But and when you see this, like the bottom candlestick is like nothing there, it's just a line. That means buyers took over. These right here, pullbacks, well damn, this should drop. But that's really it. Another thing I would like to say is when you see the sellers took over and then they never go back above, then it's most likely just going to drop down. Like they're struggling to stay above or to pass above here, they're most likely going to drop down. Even like with Redwire, you could tell Redwire was going to drop down. Let me show you. Because previously we saw how they never broke out above here. When you see stocks with this pattern, they're going to drop. They did it once last year, did it twice again. So if you would have caught this, bam, just sold it. That's really all it is. People look for setups and they execute on them. But when you first start, I would not get into trade options. I'm not going to lie to y'all. You want to make money, just do 2x leverage and just hold. Have a stop loss, of course, too. So look, buyers took over, try to break above, sellers said no. And once it drops down, it's going to stay down. So look, but if it was to go above this, then that would be a breakout and it would keep going. I'm gonna go full screen, but yeah. So that's literally it. It's that simple. Stocks move. Wait, let's search this up too. Just so you want a better understanding too. Oh yeah, dividends too. So getting paid through dividends is basically because you hold these companies, they give you a fraction of your money back. So for example, you have $800 in Southern Copper, they're going to send you back like $3 in some sense. You know, companies that hold, that will give you probably a bigger dividends price, but Southern Copper is really the best stock I recommend for, well, actually, I think ExxonMobil gives you dividends too. Also, copper, oil, Amazon, big companies, they're going to run it up again. Google, very big on Google. If a crash ever happens, stocks lose like 80% of their value. Those are the stocks you want to look at. So that's what happens. And right now, a lot of stocks, they're coming out and teaming up, doing partnerships with AI. So a lot of them are like going crazy. I'm talking about 200% gains in a day. So Redwire is definitely on that list because look, they provide and supply SpaceX. So with news like this, of course the stock is going to go up, or they supply space equipment. So space economy. I'll be typing slow, I'm not gonna lie. Could reach 1.8 trillion by 2035. See, that's 9 years from now. In order for that to happen, this has to move. And just like if the real estate market's going up, guess what's going to go up? If it's increasing in value, Caterpillar. That's really all it is. It's not that hard to understand, but look at the max gain on this. This could literally be Redwire, not even gonna lie, because it's priced at $18 right now. Space economy go up, but we're going to see how this goes. But thanks for watching this. This is just a beginner's tutorial for stocks, not that hard to understand it. The basics, how it works, index funds versus individual stocks. Let's also talk about ETFs. My bad, I forgot about ETFs. All ETFs do is they track, think of Gucci, China making a replica of a Gucci shirt. That's what they do. They copy a stock, and they could do this for crypto if you want to do trade options on it. Like they track Bitcoin. You just want to own more shares at a cheaper price. But ETFs, they just track the stock and the price of it and move the exact same as it. That's all it is. It's just a copycat. Like they got Nvidia, ETFs, it just copies it. That's why they got 2x leverage. 2x leverage stocks are just copies of this stock. So Nvidia up 1%, 2x is going to be 2. They're up 7%, then they're going to be up 14% on the 2x leverage. So that's what ETFs are for too. So yeah, that's like it. That's literally just it. Love y'all. Thanks for tuning in. Goodbye.